Let's be honest. Navigating tax rules can feel like you're trying to solve a giant puzzle, especially when it comes to dependents. For the 2025 tax year, the rules around who you can claim and what they need to do have some really specific and, honestly, kind of surprising twists. So, let's break it all down.
So here's the classic situation. You're helping support someone. Maybe it's your kid in college, an aging parent, or another relative. You're helping with the bills. But the two big questions are always, does that support actually help you out on your taxes? And, just as important, what's their responsibility? Do they have to file their own return? We're going to answer both.
Okay, first things first, let's look at this from your perspective. This is your checklist. To claim someone as a dependent, the IRS gives you two and only two different paths. You have to meet every single requirement for one of them.
And here are those two forks in the road. You've got qualifying child and qualifying relative. Now, most of the time, dependents are going to fall into that first bucket, the qualifying child category. But that second one, qualifying relative, is a really important catch-all for other situations. The key thing to remember is you have to satisfy all the tests for one of these categories. No mixing and matching.
So for a qualifying child, there are 5 tests, and you got to pass them all. The big ones are pretty straightforward. Relationship, age, so under 19 or under 24 if they're a full-time student, and residency, meaning they lived with you for more than half the year. But listen closely to this next one, the support test. This trips so many people up. It's not about how much support you give them, it's about whether they provided more than half of their own support. It's a subtle but huge difference.
So what happens if the person you're supporting doesn't check all 5 of those boxes? Maybe they're too old, or they're not a direct relative like your child or sibling. Does that mean it's game over? Not necessarily. It just means we need to look at that second category.
For a qualifying relative, the rules are totally different. First off, they can't be a qualifying child for you or anyone else. Easy enough. But then you hit 2 major hurdles. The gross income test, which means their own income has to be super low, and the support test. And notice this, the support test here is the complete opposite of the one for a child. For a qualifying relative, you must be the one providing more than half of their total support.
And here's that income limit I was talking about. This number is a really big deal. For 2025, that income limit is $5,050. If the person you're supporting earns just one single dollar over that in gross income, you cannot claim them. It doesn't matter how much financial help you give them. This is a hard, black and white rule that disqualifies a lot of people.
This table really helps pull it all together, doesn't it? For a qualifying child, it's all about their age and where they live. But for a qualifying relative, the whole game changes. It's about their income and how much support you provide. And look at that support rule one more time. See that crucial flip? For a child, they can't support themselves. For a relative, you must support them. It's so important to get that right.
Okay, so we've covered your side of the equation, but what about them? Let's flip the script and look at when your dependent actually has to file their own tax return. Because you know what? This is where some of the biggest and most common mix-ups happen.
And here it is, probably the most important rule of this whole section. Just because you claim someone as a dependent does not mean they get a free pass on filing their own taxes. They might still have a completely separate obligation to file with the IRS, all based on their own income.
The IRS doesn't care about their dependency status when it comes to their filing requirement. They only care about their income. So there are a few triggers. For instance, if they have over $1,350 in unearned income, we're talking interest, dividends, that kind of thing, they have to file. If they have a job and their earned income is over a certain amount, they have to file. But there's one more rule with a super low threshold that catches almost everyone by surprise. $400. That's it. If your dependent did any kind of gig work, babysitting, delivering food, any kind of freelancing, and they made $400 or more, they absolutely have to file a tax return. And this isn't even for income tax, it's so they can pay their self-employment taxes for Social Security and Medicare.
So, how do you make all this work without causing a major headache with the IRS? It all comes down to one very simple step. When the dependent files their own return, there's a little box they have to check. It says something like, "Someone can claim me as a dependent." That one little check mark is the magic key. It tells the IRS how the two returns are connected and prevents any red flags.
With all these rules crossing over each other, it's so easy to see how myths and misunderstandings get started. So let's spend our last few minutes just busting 2 of the absolute most common ones.
This is probably the biggest one out there. It's that fear that if your son or daughter files a return to get a refund from their summer job, you're suddenly going to lose your tax benefit.
Yeah, this is completely false. As long as they check that little box we just talked about on their return, and you still meet all the tests to claim them, then everything is fine. They can file their return, and you can still claim them as a dependent. The two things are not mutually exclusive. And here's another one that gets parents all the time, especially when their kids are away at school and maybe have a part-time job or a paid internship. It just feels like they shouldn't have to worry about taxes, right? Well, that's false too. The IRS income rules apply to everybody. Being a student is totally irrelevant to the filing requirement. If their income, whether it's from a job or investments, or especially that $400 gig work threshold, crosses the line, they're required to file. Period. So if you remember just one single thing from all of this, please let it be this. Whether you can claim them is one question. Whether they have to file is a completely separate, independent question. You have to answer both of them using the IRS rules we just talked about.
So the final takeaway here isn't a rule or a number, it's a conversation. Now that you know how this all works, who do you need to talk to before you file? Who do you need to text to make sure you're both on the same page? Getting this right really is a team effort.